Are you a supporter of more consolidation in the banking industry?
Thank you very much. I think the merger that has happened between First Gulf Bank and National Bank of Abu Dhabi is very accretive, is very positive for the UAE. And I think it's been done on the basis that, you have two strong institutions that are being combined to make them a better institution in one.
Indeed, and we had the Deputy CEO here this morning. He was talking about interest rates and what it meant for the bottom line. As I look around, I come back to the region all the time, and not that I count the number of banks, but I think you've got more than 40 banks in the UAE. Yes. So I suppose the question is, do you think, or in your view, do we need cross-border consolidation in the banking industry?
I think it's going to happen regardless, and that is due to technological changes, which will drive efficiencies in these banks. However, I might differ a little bit with others who say, because technology could foster consolidation, it might help the smaller players because now it's becoming more attainable in terms of technology. And they are starting from a very low base to attain this technology at a more cost-effective way vis-a-vis in the previous years where only the big players could afford to get into these technologies.
So as the head of the central bank, then you welcome the technology and you welcome healthy competition.
Definitely, we welcome technology. We welcome reducing costs in these banks. And these technologies will help these banks provide better service.
Now, sir, we're broadcasting around the world, and we've got Tom Keane and Francine Lacroix at the other end here. And the big concentration is New York is waking up. We're going to hear from Mr. Powell later on today in terms of the United States and their rates trajectory. For you as a central banker, will you mirror the Fed step for step this year in 2018?
We at the UAE have a fixed currency regime to the US dollar, so we will match any increase in rate.
What's the risk to the economy for you? Let's say the Fed does, as they've suggested, they will do 3 rate hikes this year. What is the risk to the UAE from an economic point of view? A slowdown? Have you factored in a slowdown?
I think the fixed currency regime has helped the UAE over the years, so there are benefits to that, which provide stability in terms of the currency exchange for the inflow and outflow of capital. So in that regard, it is proven to be positive for the UAE. Of course, when it comes to businesses, increase in rates is really increasing the cost of capital. However, in the UAE, we have what we introduced recently, which is Al-Ittihad Credit Bureau, which is really giving a score on different individuals and businesses, which means actually it's more risk, it's more specific to the risk of that entity rather than embedding a systematic risk. So i.e. the cost of capital should be reducing based on the profile of the borrowers.
So this is about you balancing. You've got rate hikes on one side, and this is your proposed strategy to balance against that. Would you consider lower reserve requirements?
At this point, it's not contemplated because we have liquidity surplus in the system. Our banks have a very high capital adequacy ratio at 18.9% versus the regulatory requirement of 12%. So all in all, liquidity is abundant. And the banking sector is playing its role to support the economy.
So we've got nice buffers of capital. Liquidity is plenty. I was looking at the U.A.E. interbank rate. It's at a 6-year high. Is that having any impact at all in terms of the lending environment or in terms of the real economy here?
Of course, there would be an impact. An increased rate, it means a higher cost of borrowing. However, what I want to mention is that the margins, between LIBOR over EBOR has been shrinking, which means this is more confidence in the UAE economy and the UAE banking sector.
So we have the form of paper that you're using, as it were, to slightly discount the rate to individual corporates, and you segregate those. You don't think you need to lower reserve requirements at the moment. Is there another way of adding liquidity? I mean, many other central banks use the repo system. Would you? I mean, you say you have plenty of liquidity, but if you needed to, you could turn on the taps.
We have a toolbox which we use, and these tools are available to the banks in case they need that. But we haven't seen any requirement for that from the banks.
Now, in terms of one of the biggest political issues in the region, of course, is the inter-regional issue in regards to Qatar. But from a banking perspective, has that had any impact in regards to, let's say, deposits or the flow of money to and from the U.A.E?
If any, actually, we are getting more deposits into the system. So, as I mentioned earlier, our liquidity is high, and the liquid resources at the banks at the moment is 18%. The LSR ratio is 18% versus a requirement of 10%.
The last time I was here, I didn't pay 5% VAT on top of the bill. My manager's sitting over there. She's going to get a higher bill the next time I go back home to London and put them in. So this VAT rise, everybody's talking about it here. They're telling me it's pushing them. Are you seeing a material impact from the 5% VAT?
We don't see a material impact, given that we are at a benign inflation level environment. Last year, I think we are closing at 1.8%. And we have some of real estate and rents decline, so it's offsetting. And it's a 5%. I don't know how much you pay in your
20, sir.
20. So on a relative basis, it's a lot less.
Okay, so we've got liquidity coming in. I mean, that's your response in regards to the regional issues. The other thing that the IMF flagged up very recently was their concern about reserves in Bahrain. Is that something that's come onto your desk? Is that something that you'd be prepared to help with if there was an issue? How do you see what the IMF have said in regards to reserves?
In terms of central bank reserves, we have plenty of reserves. We invest our reserves abroad to make sure that there is availability of dollar when it's required. So I can give you comfort that, in terms of reserves, we have plenty of liquidity. That is with regards to the central bank. With regards to the U.A.E, you know that U.A.E is a base for a few sovereign wealth funds,
yes,
which help us during difficult times.
And in terms of those sovereign wealth funds, they have adequate reserves. You don't expect to have to draw on any of the sovereign wealth funds in terms of reserves. Oil's riding nicely high.
Of course, there is a coordination between monetary and fiscal policy, and sovereign wealth funds they play a part in that equation, which means the government needs to keep certain growth rates as the economic growth rate. So in case the low oil price is there, they need to supplement it by injection from those buffers that they have.